All righty. Good morning, everyone. So I don't think we should be surprised that the market is up. This is Mr. Schizophrenic at work here. So the question that comes to my mind is it a dead cat bounce before we're heading south? Good morning. Good morning. Or is this really that low going to be the bottom? And we're going to see, but as we look at, we'll go and look at the spiders and Qs and such and see where it's gapping relative to yesterday's bar. But as you can see here on the chart of YM, and we'll take a look at the other futures, it's just kind of a flip-flop, and so far. And I'm not really that surprised, to tell you the truth, because yesterday's down bar in relation to the prior up bar to be followed by this bar, isn't that surprising. I mean, it could even be considered normal. The thing is, as we're looking at this bar, it's just starting. This is not complete. It's not as if we're looking at this at 4 o'clock. Again, Paul, bear sandwich, it's not 4 o'clock. This could be a topping tail bar. It could be a big red bar at the end of the day. It could be a green bar that's closing up at 26,800. We really don't know. But so far, this thing has played out according to, the plan that I suggested. We had a great short yesterday, a couple of them as the market went down, and it was perfect how it popped up here, right into the kill zone, so to speak, at the open. Right, I talked about this pre-market yesterday, and that set up this move down toward, it poked down through this support level, and now it's moved up to retest this area where sellers are going to show up again. So what we'll be looking for is to see whether this newly created resistance area is enough to turn things down, or whether it goes sideways here, say for a half hour or an hour. Remember, we look at trends, we look at the size of retracements, and this is a pretty good retracement, I guess, from here to here. But, in relation to, this move down, big deal, right? So we're looking at this segment here in relation to this, and this could turn out to be some, more complicated topping pattern, or more complicated, bottoming pattern, whippy. We don't know yet. Again, it's the beginning of the day, but right now my inclination at this point is to short up here, since it's at resistance. And you can see the 5 minutes starting to roll here. So I said, we'll see how it turns out. I got an email from a subscriber last night. Someone that was a student for many, many years. And, they said about they're doing fine, or were doing fine with the swing trading, but they just couldn't make it intraday. Really, intraday trading is more difficult than swing trading, but it just, look, it's kind of related to, make an analogy, is like, look, swing trading, I'm not a skier, but it's like, maybe if you were starting out skiing, you'd start out on the bunny trail, and go slow. And intraday trading, especially as you start going down to smaller time frames, it's like, okay, this one is fast, and all of a sudden now I'm at the Olympics. So it takes time to be able to process this information at a faster speed. And I say that just to make everyone who might be a little discouraged with their intraday trading to take it slow, go down to smaller share sizes and contracts, and practice with this, and learn, and being able to interpret and assimilate what's happening on an intraday basis on multiple time frames. So it's not that you can't do it, it just is just more difficult. It's coming, Neil. When I'm quite honestly, with the intraday course, I've been struggling with reproducing all the material in the swing course or the gap course. And I'm like, I could do all of that and repeat the whole thing, but it's essentially going to be the same. I may, communicate it slightly different, but I can't change the foundational information. So what I was thinking of creating here was, as the intraday course, was including the swing course, because there's lots of great stuff in there, and the gap course, and creating a whole bunch of intraday videos interpreting and explaining, maybe even, I keep quiet in the room and just trades that I'm doing and explaining them what's happening in the moment. Because you see what I do in the room is I'm telling you, what's happening here, and what should happen at certain levels in bar by bar analysis. And it's the details of understanding all of that in multiple time frames that, is really, I think, kind of priceless to an intraday trader. But anyway, it's coming. So, all right, let's move on here to the other things. And so we've got a lower high in the NQs, a little bit of relative weakness, actually. And you can see it's stalled here at resistance, right? We look to the left, all right? Look to the left, look to the left, what's the reaction? So initially the reaction here is one in where you had this little consolidation. And if we look at the smaller time frames, right, it was a little base and it broke out and says, okay, it'll go higher. Nope. Right. Sellers come in and take control, and where it hasn't completely rolled over yet, it's the beginning. So it's a little too early to say the coffin nail is in it here for the bulls. But, it's got the start of it. And when, we look at something and say, oh, wow, the Dow is up 500-600 points. Wow, wow. Well, look at the chart. Is it really doing something impressive, or is it just kind of mediocre? Right. So if it was to close like this, we could say, not bad, buyers. You stepped up, you pushed deep into the red candle here. But as far as, what's happening here this morning, they're not out of the woods here with this yet. We have yet to see what's happening. Right? We already looked at YM. I guess we didn't look at ES then. Right? Same story. Right? Nothing much I could really say different about what's going on here. We'll see what it's like at the end of the day. Russell, obviously the weaker hourly patterns look similar. It got up to that area where the seller should be, dropped like a rock yesterday, retracing back up, and we'll see what happens here after a little while. Oil is up here, in relation to this nasty downtrend. And ES levels for 0. Well, yesterday's high. All right, well, let's continue here, and we'll get to the ES or SPX trade for today. Wide range bar. Why wide range bar? Right, look to the left. Right, bottom of the trading range. Buyers stepped in and been declining, gapped down. Obviously, shorts are going to cover, and now so far it's just chopping around at the top of that. That's positive, but below any resistance supply area. So we'll see. Bonds and a neutral here. Big day yesterday as the markets went down. And I look at this chart and I think, well, what does this tell me about bonds? This pattern, not really about bonds, about this pattern. It could be an inside neutral kind of a day, which if that's the case, maybe the market's going to be like that, which would be good for the 0 time to expiration trade for SPX, a choppy go nowhere market. This has come up into this resistance area up here that we've been monitoring. So it makes sense for the momentum to stall. And so, maybe we're going to have a kind of a go nowhere day here. We'll see, which again, if this was able to close like that, would be good for buyers, to be able to be building this. But in Mr. Schizo market, maybe it would open up down here tomorrow. I don't know. In a situation like this, we are processing this information, kind of looking for, what's in development mode, so to speak, which is what it is. So we have to continue to do that. I'm saying in YouTube, it looks like the uncertainty in the virus, elections, and Fed rate cuts are finally looking more certain. I suppose. Well, you know what? I guess as the noise in the Democratic race as to who's going to show up, but if it is Biden at the end, he may forget to show up for the debate or that he's actually running for president. With Trump, who knows? The guy kind of loses his train of thought and what he's saying in a moment to moment. Pretty comical. Anyway, John's asked me 0-day to expiration SPY trades. So you could do, John, you could do spiders, you could do SPX. Traders in the green room would do one or the other. A lot of us prefer the SPX because of the leverage there. All right. Gold. All right, big turnaround. Yeah, he'll show up for the Senate debates. Big turnaround, impressive. Turnaround in gold as the market sold off yet, but up at resistance here. And that's another piece of information that kind of leads me to thinking maybe just kind of a neutral day. I was kind of hoping for, the markets to be taken out to the woodshed and collapse them here, but maybe that's not going to happen. With these things that are going on here, I'm just not sure. But as I go back to this hourly chart, again, I guess I'm kind of hoping for a rollover and eventually a break of down here. But the longer this goes sideways here, the more it becomes, well, where is it really going to go? It still can go down, but if it can go sideways here and resist this supply or absorb it, well, I have to accept that as a positive thing for the moment. So again, it kind of leads me back to, I'm not so sure, right? So we'll wait here. Would SPY bear call spreads be in play today above resistance? Absolutely. So Peter, what we'd be looking for here is we've got one piece of information of this topping tail candle, this rejection of this area. So what we do is show me a little bit more when the markets are open and everybody comes to play together, right after 9:30. And if we see a drop here, to the downside, would show some, taking control of the sellers. Well, then we go and look at the premiums in these SPX spreads up above, say, 3150 or even higher, right? Maybe up here, right? And say, okay, we can sell a spread up here. All we're doing is saying, hey, based on this pattern, it suggests it's not going to come up here. So we sell a spread up in this level with the expectation that we're going to get to keep that money at the end of the day because it's not going to go up there. It's relatively simple, right? Now, on the other hand, if we see it poke up into this high here and start hanging out, we start looking for put spreads down below here. And if it does follow, we start seeing by, say, 10 o'clock that, hey, this thing gets rejected from the downside, it gets rejected for the upside. It may be an Iron Condor day, sell up above, sell down below, or are there premiums there? Right. So that's what we call the factory work. Amazon put spread credits. I'll leave that to Dan. Right. Dan, a put spread, 1800, 1790 credit spread. You can take a look at that. Let me continue here. Silver, weak, way weak compared to gold. It came down, to that support level down there and, bounced back up. But kind of makes the whole, gold, silver move, immediate move anyway, in question because of this drop. But, the market's been a bit crazy. Anyway, so now what I want to look at quickly here, because it's getting a little late. Spiders, where are they? All right. So 305, gap up. So what I do is gap up, gapping up into the middle of this big red bar. Big deal. As I say, big deal, right? Now you've created a void below, which is, so when I look at that S&P chart and I see that hourly starting to roll over, and this void, and I'll keep an eye on this. If it starts to crack here, short spiders, short ES, and so on. And then we could look at different stocks to say what, the same. Now, of course, yesterday's low is going to come into play, not Friday's low. Yesterday's low going to come into play as an area of support. And that's where we'll all say, well, can it break down and keep going? Trading is just a process of looking at the time frames you're trading in, and taking note of the reference points and where the reactions are. So in a downtrend or a broken market like this, where prices come up to areas of resistance, intraday, you look to short, and then you see what happens with the appropriate pattern. All right, Qs, where are they? 213, same story, big deal, right? You haven't impressed me to negate yesterday's nasty reversal, okay? And we'll see how it plays out. YM or Russell to 150, a little bit more impressive into that bar there, right? But you got all this mess over here. We're going to have to give it a little bit of time to digest this gap up. But we're not getting all, this doesn't give us more information, all caught up in the guy on CNBC saying, oh, look at the market, it's up 600 points, yada, yada. Really? Well, you didn't do much to impress me that you've negated this red bar. On the other hand, right, if this was gapping up to 268, I'd like be damn, that is impressive. Right? So that's part of how we interpret gaps. It's like we interpret retracements, right? If this move up here without forming the red bar could have retraced up to here in one swoop, I say, well, that is impressive. And we do the same thing with gaps. All right. So I don't think I need to go through anything else. All yours, Dan. You can cover opens and so on.
All right. Good morning. So, yeah, I'm listening to you talk about no big deal, this and that. And yeah, I think we need 30, 60 minutes here. But if I'm more bullish because of the gap, because it's a 50% gap into an ugly red bar. So just using our retracement concepts, if we hold here, 30-minute high, I'm going to be going back to selling 0 and 2 DTE put spreads and shorting call spreads on the VXX. We had a ton of marvelous put spreads over the last couple of days, and today's MT Live is how to trade stocks and options in tanking markets, so very timely. And so we stopped out of a bunch of things yesterday, but every single one of them at a nice gain. But this is fairly, it's fairly bullish. So 30-minute high. I think we have our simple lines in the sand, as Greg said. 30 or 60-minute high or low. We'll do call or put spreads, 0 DTE.
Dan, one point to make is that, bullish for a put spread is very, especially 0 days to expiration, is very different than bullish in comparison to what's happened on this daily chart.
Absolutely. Right. You don't say, I didn't give one single swing long yesterday. Not a single one. We got 1 or 2 of them in this run. But yeah, everything's been call and put spreads, call spreads on TLT and VXX, which are inverse the market. But my point is, off the oversold internals, I've been 100% bullish on put spreads. Yeah, somebody asked about Amazon. Yeah, that was one we were in. It was in our weekend letter as a no-brainer here. We had an 1850, 1800, 1750, gapping up. 30-minute high. Yeah, we got stopped out. We took half. We sold it for $8. We took half at $1.50 yesterday in the strength, stopped out of the back half of the profit. But we are going to have, again, 30-minute highs. We'll just go through. When there's so many choices, I personally kind of just start with either the index ETFs and or our you know, the market's go-to stocks. So the FANGs, Microsoft, Intel, you know, just the regulars. So yeah, absolutely. Put it on your list. I got NVIDIA put spread. It's an idea today. I like this one because it held the upper part of this wide range bar price void. So this one's a definite put spread candidate. I noticed shop also. And we've been making comments a lot, even on these put spreads, of focusing on the ones where the weekly and monthlies are not destroyed. Like AAL, American Airlines, the weekly and monthly are destroyed. So I have much less interest in that than the ones that are holding, unless it's in a industry that's just getting its head chopped off. We've had amazing put spreads in RCL. I was adding yesterday. We actually Craig have 4 open trades in that at different expirations, different strikes, and I'll be looking to add again. They're very spready, so we're kind of having to play market maker. CCL, a competitor. I like this. I posted it pre-market as a put spread. 30-minute high. Or no, actually, because of the gap up, I just said, let's try to get it. Here, let me give that to you all here. Kevin, your drop down, please. So look, this is for Friday expiration. 30.24, and the only reason I'm going so wide 24, I just went down as far as I could to get the maximum credit. And today's Wednesday. All I'm doing is taking a bet that this $30 is going to hold for 3 days. That's it. I nibbled on some LUV yesterday, but I canceled it because deep retracement. But I sold the $40 puts for next week. And UAL, these were the only 2 airlines I had on my radar because of the monthly support. And they close weak. And we don't need to get the dead low of these things. Volatility is going to remain high, both in the broader markets and in individual stocks. So again, just this is going to be a wait and see for 30 and 60 minutes. And we'll just remember, trading is trading with the whale. The whale is swimming in the ocean, and we don't care why he wants to swim at 84 degrees. I don't care why. I'm no whale expert in terms, you know, psychologist, but I can read which way he's going to go with charts, and we're just going to take a ride on whichever way he wants to swim. These health insurers are gapping up, I guess, because of the win, you know, the wins last night, Biden over socialist Sanders. Two-way said that, look, it's gapping way the heck up here. The gap's too big for me for a trade unless you can get a put spread off. And now my charts don't want to work, so let's just 357. Very, very bullish. These are put spread candidates, but I prefer a little pullback because the strike has to be yesterday's low. But these are so bullish, McGraw, we can even go out to next week. So Kevin, if you can put your drop down to all panelists and attendees, but Kevin's asked me about NET. It's been on my list for a while, just because it's very messy, but this is a great example of holding relative strength in a tanking market. So Greg, actually, let's remember to talk about relative strength. I should have put a slide in there. I'll try to remember that. But you know, something that's not falling with the market tanking. Yeah, that's a great concept. I'm gonna have to grab a slide. And you also asked about work. Let me see where you're gapping. 27.31. It has to today's Wednesday. It really has to get over Monday's high. I just wanted to look at these brokers because I read again an article in the paper in the journal today about Robinhood and brokerage firm. Yeah, Greg, the paper said they have over 1 million clients. We were talking about they had an outage, a very severe outage Monday and Tuesday, locking their customers out. They couldn't trade. I hope they have a good legal defense fund because I guarantee you they're going to be getting some lawsuits. Schwab got, I mean, there's going to be so many similar patterns. Climactic buy setup, nasty reversal, bullish gap, so many. And that's why, like I said, I just like focusing on the spiders and Qs. They're liquid, they're great, they're good premium. Sure, I'll consider any individual stocks, but you know, don't get too scatterbrained. Boeing for put spread. It's a nice 15-minute chart. I like these gap ups over resistance and a nice little buy setup, cup and handle with a price void. So for a day trade, it's not bad. It's in a nasty downtrend, daily, weekly, monthly. So it's one of those where you're swimming upstream. So I think we can find better for put spreads. CNC, 60 bucks, big gap, but it's too big. Yeah, and Boeing, you're still gonna have the news problem. Look at this gap and go, wow, I missed this 15-minute chart. Now, it is a late day breakout if you consider this flagpole from the pre-market run. But what an afternoon breakout. Wow. CDLX getting slammed, 60 bucks way down here, nothing to do with it. Plab, it's flat. I'm just deleting you, you're ugly. Yext shows up $1.84, 16 and change. Put spread. YouTubers asking about Golf Tango. Hey, we traded that last week, I remember. I think right over this bar, we traded it. Today, it's a big mess. You got a nasty bottoming tail, you got a topping tail at resistance. That is a definite stay away for right now. Vive, very, very sloppy, but it's gapping up to 151. So McGraw, put spread candidate. All right, Q is going sideways here, but not bouncing. So, yeah, totally sidelined at the open, 1186. This thing's gapping down in a downtrend, looks lower. AMBA, 62 bucks. Nice gap over the red bar. So McGraw, put spread candidate, maybe 15-minute high or so. You know, we just want to see what it does with the market in the first 5, 10, 15, 30 minutes. But that's, I like the gap. Vivas, $1.70. Wow, went from $4.